Oceanwide Holdings saw its shares hit the daily limit up and limit down on all 85 trading days over just 4 months. At times, the stock would continuously hit the limit up, tripling in price, only then to plummet into the depths of the limit down, losing 80% of its value. However, this magic show by Oceanwide Holdings came to an end on February 7th when it announced its delisting. This stock, once glorious with a market value of up to 260 billion yuan, witnessed the ups and downs of China's real estate and capital markets. Zhiqiang, its founder, is a legend in the business world. Enveloped by ambitions of expansion, Zhiqiang utilized his Mingsheng Bank and trust financing institutions, employing high leverage to rapidly expand his business empire. However, the good times didn't last. The financial deleveraging campaign led by Xi Jinping in 2017, the regulatory control of the real estate market in 2021, and the pandemic dealt a triple blow to the cash flow of Oceanwide conglomerate, exacerbating its financial crisis with a series of rare fraud cases. In 2020, China Minsheng Trust, a subsidiary of Oceanwide Holdings, directly lost 4 billion yuan due to a fake gold case. Its investments in projects like Baoneng Group and Kaisa Group also resulted in heavy losses, leading Oceanwide Holdings to suffer a loss of 4.6 billion yuan that year. The story took place in 2015 when Kingold Jewelry produced 80 tons of fake gold in the form of gold-plated copper, and then used this batch of gold as collateral to finance nearly 18 billion yuan from more than a dozen trust companies and banking institutions. It was a major scam. However, the complex plot was not revealed until 5 years later when Kingold Jewelry defaulted on its debts and attempted to fulfill its obligations with fake gold, which was then discovered. Minsheng Trust took the hardest hit, with the explosion amounting to 4.1 billion yuan, setting a record for financial institutions. Yet who could have imagined that it would be these 4.1 billion yuan that would bring down Oceanwide Holdings, a nearly 300 billion enterprise? According to the real estate cycle, Zhiqiang should have been able to overcome the difficulties by 2020. However, at this time, China's 3 red lines financial regulatory guidelines struck like lightning, extending the downturn in the real estate cycle to the present. Even industry giants like Wang Jianling, founder of the Dalian Wanda Group, and Sun Hongbing, founder of Sunac, were impacted. However, the 4.1 billion yuan explosion of Minsheng Trust finally drained the last bit of liquidity from the Oceanwide Group. Zhiqiang accumulated debt of 130 billion yuan, like a ticking time bomb, exploded at that moment. It was then that Zhiqiang realized the situation was dire and began to sell assets to survive. However, the pandemic hindered the sale of many projects. During the past 3 years of the pandemic, Oceanwide Holdings accumulated losses of up to 27.3 billion yuan, a figure higher than the company's total profits over nearly 30 years. At the same time, its total assets were finally surpassed by total liabilities, entering a state of insolvency in the first quarter of 2023. In just a few years, the vast Oceanwide Group collapsed. In 2021, there were rumors that Oceanwide Holdings would be the next giant to fall. Partners who worked with Oceanwide suffered heavy losses, and assets that provided guarantees for Oceanwide Holdings' debts were taken by banks. That year, Oceanwide's major backer, Zhiqiang, seemed to have given up, leaving Zhiqiang to watch his business empire falter. In 2021 and 2022, Oceanwide Holdings recorded losses of over 10 billion yuan for 2 consecutive years, and in the first 3 quarters of 2023, it lost nearly 7 billion yuan again. In 2023, Oceanwide Holdings topped the A-share market with a glorious record of 59 limit downs. Domestic investors joked that at this rate, there is no need for the West to take action. The communist bandits, referring to the Chinese Communist Party, CCP, will finish themselves off. On its last trading day, the stock closed at 0.38 yuan, with a total market value of only 1.9 billion yuan, merely 0.7% of its peak value of 260.9 billion yuan in 2007. At the end of September 2023, Oceanwide Holdings' total assets were about 90.6 billion yuan, with the total liabilities about 98.1 billion yuan, insolvent. Mingsheng Bank even announced plans to sue Oceanwide Holdings Zhiqiang, claiming damages of over 7 billion yuan. The collapse of Oceanwide Holdings is not just a story of a business failure. It profoundly reveals the vulnerability of the entrepreneurial enthusiasm ignited in the early days of China's reform and opening up under the current policy and institutional environment. The downfall of Oceanwide symbolizes the end of an era, marking a setback for China's economic vitality and business spirit in a harsh political and economic environment. Without true economic autonomy and a legal environment, even once giant market players may not escape a dismal fate. This represents the greatest systemic risk facing the Chinese economy. Without a genuine market-oriented soil, businesses are like rootless trees, vulnerable to collapse amidst changing environments. The story of Lu Zhiqiang, a Weifang government official turned business elite, is legendary. His success was not just due to business acumen, but also benefited from strong political backing in a special political economic context. In China, financial licenses are symbols of power, beyond the reach of ordinary entrepreneurs. Lu's acquisition of these licenses highlighted the extraordinary forces behind him. Lu's journey mirrors that of his generation of Chinese real estate magnates. Most transitioned from politics to business, adept at leveraging policy directions, seizing opportunities, accumulating resources, and then successfully entering the real estate industry. Starting in 1971, Lu worked as a technician at a diesel engine factory in Shandong, Weifang, and later became the deputy director of the Weifang Technology Development Center. This experience within the system laid the foundation for his later business success. In the mid-1980s, as the planned economy transitioned from a market economy and from the rollout of real estate reform and state-owned enterprise reform, Lu sensed business opportunities and firmly entered the real estate domain. In 1985, after founding Oceanwide Group, he quickly succeeded in the real estate market and moved north to Beijing. In 1998, he established Oceanwide Holdings Group with a registered capital of 4 billion yuan, completing a remarkable transformation from a grassroots government official to possessing a huge registered capital in just 3 years. However, the sources of his funds and the political power behind him remain the focus of outside speculation. Despite Oceanwide's success in securing prime locations, the company's high-end development strategy meant it was smaller than its peers, with hundreds of billions in revenue. In 2014, its real estate business revenue was only 7.6 billion yuan. However, Lu's sharp market insights led him to recognize the potential of the financial market early on. In 1998, he acquired Shenzhen-listed company Shenzhen Nanyou Property Development, naming it Guangcai Construction Group. The company raised 400 million yuan through shares allotment, tasting success and solidifying his determination to delve deeper into the financial sector. Consequently, through a series of capital injections and shareholdings, he successfully acquired Mingsheng Bank, Mingsheng Securities, Haitong International Securities, Mingsheng Life Insurance, Mingsheng Trust, and other financial institutions. By 2014, Lu shifted the company's core to real estate, finance, and strategic investment, acquiring over 30 financial institutions on a large scale, making Oceanwide Holdings one of the few domestic enterprises with a full financial license. Besides financial services, Lu actively made strategic investments in other industries, covering markets like A-shares, Hong Kong stocks, Australian stocks, and U.S. stocks. He invested in over 40 companies, including Red Star Macaline, Ant Group, and Tencent. Oceanwide Group's total assets once exceeded 300 billion yuan, becoming a vast business empire spanning real estate, energy, finance, technology, and overseas investments. The question now is, where did the 300 billion yuan in assets go? Who took over Oceanwide's assets? Was the money given to the public? Not at all. Below are limited examples of asset transfers from 2019 to 2022, revealing how the once vast business empire of Lu Zhiqiang had its assets taken over by state-owned enterprises, private companies, and foreign capital groups in the face of adversity. A portion of Mingsheng Securities' equity was purchased by Wuhan's state-owned assets. The Oceanwide Entrepreneurship Center building was taken over by Hubei state-owned Changjiang Securities, and the asset disposal of Mingsheng Securities was handled by Shanghai State-Owned Asset Supervision and Administration Commission, totaling 13.8 billion yuan. The entire equity of Zhejiang's Oceanwide, worth 2.2 billion yuan, properties in Shanghai's Dongjiadu and Beijing's Fanhai International Residential District for 12.5 billion yuan, totaling 14.5 billion yuan, were all acquired by Lu's friend Sun Hongbing. The IDG Group was bought by the American Blackstone Group for $1.3 billion US, showing the involvement of pro-communist international capital. Equity in CITIC Industrial Fund for 270 million yuan was purchased by Shanghai Haixin Group. Parts of a Wuhan company's land for 3.1 billion yuan were bought by real estate giant Greentown. Another portion of Mingsheng Securities equity for 2.4 billion yuan was purchased by two of Lu's acquaintances from Shandong. The intricate web of relationships includes the Shanghai Clique, the Taishan Club, various state-owned asset committees, and the American Blackstone Group. Despite the transfer of 40.3 billion yuan of Lu's assets, compared to his once trillion yuan asset scale, a large amount of asset whereabouts remain unclear, possibly involving more undisclosed or untracked asset transfers and financial operations. Meanwhile, the Oceanwide conglomerate also faces issues of undisclosed overdue debts, including, but not limited to, loans from institutions like Everbright Xinglong Trust, Shandong Expressway Company, Yingda International Trust, CITIC Trust, and Agricultural Development Bank of China. The delisting of Oceanwide Holdings could drag down many companies, affecting the entire financial and real economy sectors. Leaders of conglomerates like Evergrande's Xu Jiayin, Tomorrow Holdings' Xiao Jianhua, and Anbang Insurance Group's Wu Xiaohui face legal trials for various reasons. The future of remaining private enterprise giants like Zhiqiang is filled with uncertainty. If more business leaders face issues, it could significantly impact the entire Chinese economy and society. The livelihoods of Chinese people, including real estate, automotive, and banking services, could be affected. Zhiqiang's success story was also written with the mutual support of billionaire entrepreneur circles like the Taishan Club. This club brought together numerous business heavyweights such as Lenovo Group's Liu Chuanzhi, Systex's Duan Yongji, Fantong's Feng Lun, Giant Network's Shi Yuzhu, Baidu's Robin Li, and Fosun's Guo Guangchang, who supported each other financially. Although Lu was adept at managing interpersonal relationships and could expand through financial and capital operations with the help of his background and brothers, he was not as skilled as running a business profitably. The company's 5 financing methods, all involving issuing and borrowing debt, led to an ever-increasing debt load that ultimately resulted in a break in the capital chain without sufficient assets to back it up. Especially after the times changed, with Xi Jinping taking full control of military and political power, the forces that once supported Lu began to look after themselves, leaving no room to care for others. The Taishan Club was forced to disband amid a tightening of political and financial policies. Once glorious business tycoons now face severe asset shrinkage, debt restructuring, or even bankruptcy and retirement. Former allies like Shandong Expressway Company, financial institutions, and past friends like Shi Yuzhu have turned to sue him, accelerating Oceanwide's collapse. The delisting of Oceanwide Holdings, unlike Evergrande Group's numerous unfinished buildings, acts as a mirror to the internal power struggles and political maneuvers within the Chinese Communist Party. It highlights the involuntary end of an era for private entrepreneurs. Following Xi Jinping's establishment of firm control, business moguls who emerged during Jiang Zemin's tenure, such as Xu Jiayin and Jack Ma, are encountering unparalleled obstacles. They are at risk of swiftly losing their influence due to shifts in the political landscape. This situation can be summarized as witnessing their rise to prominence, their moments of glory, and then observing the downfall of their enterprises. Oceanwide Group made many acquisitions with investments often amounting to billions. Where did the money come from? Essentially, through the following 5 financing models. After the backdoor listing, Oceanwide Group raised funds mainly through private placements and issues of shares. It financed 20 to 30 billion yuan by issuing corporate bonds with interest rates between 5% to 6%, considered average among listed companies. However, changes in the market and deteriorating business conditions eventually led to debt repayment problems, causing losses for many investors. Nearly all of Oceanwide's listed entities frequently engaged in share pledge financing, repeatedly pledging their shares to secure funds. Utilizing banks affiliated with Oceanwide, especially Mingsheng Bank, the group obtained a significant amount of funds. This method allowed Oceanwide to secure loans from Mingsheng Bank, either directly or through non-governmental entities, involving amounts typically ranging from 1.1 billion to 10 billion yuan. Oceanwide also raised substantial funds through trust products, including cooperation with institutions like CITIC, raising 17 billion yuan through trusts. However, all these raised funds are now unrepayable. By July 2021, Zhiqiang had become a person subjected to enforcement, with the amount executed against him reaching nearly 5 billion yuan. Liu was also subjected to high consumption restrictions, prohibited from flying first class, staying in star-rated hotels, playing golf, and other high-end expenses. In recent years, the model of China's economic growth has sparked widespread discussion and reflection. Relying on resources within the system, many Chinese elites gained institutional dividends from reform pilot projects, and the disappearance of such dividends often led to the rapid collapse of business empires. Financial commentator Zhang Jinglun points out that the bankruptcy of the Oceanwide Group and Liu Zhiqiang's debt situation are microcosms of the current state of China's economic system. This indicates that the long-standing reliance on rapid development through financial capital is unsustainable. Zhang further explains that within the CCP's ideology, private entrepreneurs and wealthy businessmen are viewed as unreliable, and this includes CCP members like Liu Zhiqiang. This mindset almost predetermines their failure, since the essence of the CCP does not allow for the growth and development of private capital. Under such conditions, China can't possess a true entrepreneurial spirit, making it difficult for people to achieve genuine happiness and freedom. With the passage of time, the landscape for Chinese business magnates has drastically shifted. These tycoons dominated sectors like land, finance, and mining, experiencing rapid wealth accumulation, courted by banks, and revered by brokerages, wielding significant influence. However, in today's evolving and volatile economic environment, lacking robust financial management, genuine business activities, outstanding management abilities, superior product quality, and visionary strategies, these dominant figures are confronted with a harsh reality. Without these critical competencies, even the most powerful among them risk being sidelined, becoming relics of a bygone era. The saga of Oceanwide Group and Liu Zhiqiang epitomizes the broader narrative of economic and social evolution in China. Their journey from rapid expansion and bold investments to overwhelming debt and the eventual downfall of their business empire encapsulates the cyclical nature of growth and decline. This storyline serves as a cautionary tale about the inherent risks of speculative bubbles in China's economic growth and the pitfalls of a development strategy overly dependent on real estate, finance, and natural resources. It underscores a vital message. Without prudent financial oversight, genuine business dealings, exceptional management skills, top-notch product standards, and a vision for the future, even the most formidable enterprises are at risk of being left behind in a rapidly changing world. In the current economic environment, some companies face immense financial pressure, leading to an inability to repay debts, which in turn affects stock prices and overall economic stability. This situation is not limited to Oceanwide Holdings. As economic challenges intensify and the need for funds become urgent, it not only causes anxiety for Xi Jinping, but also involves economic relations with countries like Russia, Iran, and Venezuela, all waiting for economic aid. In this complex international and domestic economic backdrop, leaders facing significant economic decisions and health issues are undoubtedly going through a challenging period.